Dear everyone, thanks everyone for joining the webinar. Today's webinar topic is about your guide to the 2025 gold markets, trend, opportunities, and strategies. Gold has stood the test of the time as a powerful asset. As we look ahead to 2025, the gold market is primed for the potential shifts, making it more important than ever for the investors to stay informed. Where are the biggest opportunities in 2025? What trends should the investors be watching to make the most of the precious metal? This webinar will guide you through everything you need to know about the gold market in 2025. Before we kickstart our session, just wanted to do a quick introduction of Phillip Nova. We have been in the financial industry over 40 years. Maybe the name sounds a little bit new to you, but we were rebranded from Phillip Futures to Phillip Nova in the last 2 years. Phillip Nova was inaugurated in 1983 as a member of Phillip Capital Group, and then and is one of the founding clearing members of Singapore Exchange Derivatives Trading (SGXDT). We have since grown to become one of the region's top brokerages for the trading of stocks, CFD, forex, futures, and precious metals. Today's topic is about gold. So here are 4 ways to trade gold with Phillip Nova, including spot gold, gold futures, gold direct investment, and gold ETFs, offering for you depending on your investment or trading needs. You can scan the QR code for more product offerings information on the right-hand side. And then also we are having a promotion about Apex Perpetual Gold Futures. You can access a more capital efficient way to trade gold with the Apex Gold Perpetual Futures. The contract comes with no expiry dates, low margin, and with more than 20 times leverage. You can scan the QR code for the product details if you want on the right hand side. And also on the left hand side of this page, there are more promotions that we are running for the different kinds of products that we are offering. And if you are more interested in the education materials that we are providing, here are more webinars and seminars we are providing in this month and next month. You can scan the QR code to learn more. Okay, coming back to our topic again, let me introduce our speaker today first before we kickstart the session. Priyanka is a senior investment analyst with Phillip Nova. Earlier in her career, she was a trader with one of the largest financial services firms in India. With more than 10 years of experiences running trading and hedging strategies, financial modeling and valuations, institutional sales and risk management, Priyanka is well versed in identifying trading on investment opportunities and presenting strategies across all financial asset classes. Priyanka frequently shares her macroeconomic views on equity indices, commodities, and forex with the media, which includes technical analysis articles for the Business Times and interviews with Money FM on their Money in the Market segment. If you have any questions during this webinar, you can text at the chat box. We'll address them at the end of the session. Okay, let me pass the time to Priyanka. Priyanka, your turn, please.
Thank you so much for Joey for bridging me in, and a very good evening to everyone who is tuned in. Like she just mentioned, I am a senior market analyst with Phillip Nova, and today we'll be talking about gold. We will be discussing the trends, the opportunities, and the strategies that you as an investor should be using going forward in 2025. Now, the entire she just shared that I have before joining Phillip, I was a trader myself, and over the years, almost 15 and counting, I had been trading a lot of products, including gold. I started with equities. I've done derivatives and everything, and so today's information is a culmination of my trading experience, my current macroeconomic analysis and studies, and it's just my personal opinion of how I track gold movements and what I feel about is going to happen in 2025. So during the presentation, we would be discussing what was 2024 like for gold, what happened, what is the current market snapshot, where we stand at the end of 2024, what will be the fundamentals that will be shaping gold in 2025, what are the key events, the key strategies, the key trends that I foresee and investors should look out for. We would also discuss certain concerns that are there, macroeconomic or trend based concerns that surrounds gold in 2025 and what can happen. And then I will be sharing my technical perspective at gold, its price, its forecast, and I will also explain certain trading strategies that you as an investor can look into if you're trying to gain access to gold, or trying to include gold in your portfolios. Um, so let's start. To begin with, basically, 2024 can be summed up as following macroeconomic drivers. The year was witnessed plenty of these macroeconomic drivers, geopolitical conflicts, whether it was Middle East or Russia, Ukraine, and all these crises have led to a lot of supply shocks in many commodities. In fact, a lot of supply chains or supply routes have been shifted because of this. So that has been contributed to what happened to gold. There were factors like higher, longer rates, projections. 2024 began with the hopes of Fed easing in the very first quarter, but that has been trimmed over the year. And obviously, the backdrop of higher rates had led to some global economic slowdown and sluggish demand, and that is also a determining factor of what happened in gold. 2024 was also an year full of elections. Almost half of the globe underwent political shifts, and political shifts come with changes on trade and policies. Some of these changes are already has acted throughout 2024, and some of them will come in early 2025, especially Trump. So that will impact a lot of global trade and dollar, and that in turn has affected gold in 2024 and is going to impact gold in 2025 and beyond. But the good news of the entire 2024 was that somehow we have finally got a cottony soft landing. In fact, it is very much contradictory to the basic assumptions or anticipation markets had in the beginning of 2024, but somehow we have avoided hard landing. But that doesn't mean the battle is over. Inflation is still there, we are still battling it, and there are immense concerns over China's bumpy recovery in 2025, so we'll have to see all that. So, in a nutshell, all we can say that there was no shortage of macro drivers for gold in 2024. That led to a gold rush. So, in a nutshell, if I have to say how was 2024 for gold, it was a bumper year for gold. Gold reached new records high. Especially if you look at the chart, we reached a record high of 2788 on October 30th, which is, in fact, gold prices hit 39 times 30 new uh, the record highs in 2024. It currently also stands at a whooping year to date gain of about 31%. And all of these events that you can see on screen right now somehow contributed to it. We had seen some outbreak in Middle East in the last quarter of 2023 that escalated in the very first week of January, and that the entire first jump that you see in the gold prices is because of those geopolitical crises. Now, that led to a lot of uncertainty, for which the global central bank started accumulating gold reserves. So by April, we started witnessing a lot of incoming news over central banks buying. So that created a demand for physical gold. Now, at the same time, we had this perception that Fed should be easing, but there was off and on of inflation, off and on of wars going on. So that kind of stalled the or trimmed the pace and the timeline of Fed rate cuts, and that's how you see a consolidation in gold in between April and July. Finally, we see Federal Reserve embarking on Fed rate cuts in September, and they practically surprised markets with a 50 basis point cut, followed with a jump in retail participation into ETF flows. They were like ETF flows have been negative for last 3 years, but in September 2024, we started with from October, and the last quarter has seen a rise in ETF flows. So that also added to a demand. Eventually, all these factors, including the uncertainty just before US election, they all supported a big rally in gold. So if I have to conclude on what exactly happened and what all propelled gold, there are four key drivers: geopolitical uncertainty, central bank buying, investment demand, and Fed rate cuts anticipation. So, economic and geopolitical uncertainties tend to be always a positive driver for gold. It is not something new that happened in 2024, it has been historically same because gold is historically considered a safe haven asset and a reliable store of value. So, when markets have geopolitical uncertainty, there is a downfall in investment in risky assets, and generally the fund moves to, or people or investors want to move their funds to gold. So obviously they are supportive of gold buying. So in addition to that, 2024 also came across with the interest rate drivers and the geopolitical concerns. So that's why such a whooping jump. Now, many of these uh, bullish drivers that we saw in 2024 have lifted the prices to new year, but going forward it's important to understand their individual relationship to gold. So for example, let's talk about the geopolitical crisis. Last 4 or 5 years have seen considerable rise in geopolitical stress across the globe. The world that once relied on globalization for growth is now focusing on power struggles, regionalization, de-dollarization. So, and even in much recent times, in 2024, I would say the spike has in geopolitical risk has grown even stronger. I will not get into details of what exactly happened in 2024 because that would mean another webinar for another day. But broadly, there was revival between Russia-Ukraine in August, Russia's largest air assault since the war began happened, and that again raised the geopolitical premium that was being inflicted on gold. The assassination of Hamas leader also contributed to it, and the retaliatory action that we witnessed from Iran and Hezbollah has sharply increased the tensions between Middle Eastern nations. So it is ongoing, it is consistent, and a constant support to gold. Now, this is how all these crises have supported gold. In fact, it's imperative to note here that compared to all the other assets, for example, like global equities or other commodities or precious metals or any bonds, whenever there was a spike in geopolitical risk index, this is a graph that shows spikes in geopolitical risk and how all these asset classes performed. So it appears that gold has continuously outperformed almost all asset classes in response to geopolitical risk index in 2024. So it is testimony to its basic goals allure of being a hedge against uncertainty, or its proven track record as in protection against inflation, or purely I would say sentimental driven rally in gold because there were wars, there was uncertainty, there were risk. Another factor that contributed to gold this year was central bank buying. If you look at the chart here, I took it from the World Gold Council. So the quarter by quarter addition to gold reserves is on constant upswing. And that is not only shift to gold holdings. That it also accompanies a downfall in holding of US dollars. Now, what triggered it? Why, central banks resorted to gold? So when Russia attacked Ukraine and Western countries jumped into freezing the assets that Russia held, right? So it kind of give a perception that US dollar reserves are not as safe as they were initially believed to. After the World War II, US dollar has been the um, major currency in which global trade happens. And that's why most of the central banks had dependability on those US dollar reserves. But if those assets can be freezed from Russia, right, it kind of triggered a de-dollarization. Central banks wanted to shun out of dollar reserves, and the only reliable alternative to this is gold. So even the historic trend suggests that buying gold is the only alternative if you want to have a risk-free counterparty asset, and it has proven it throughout the history. So that also triggered central banks. And if you talk about numbers, we have seen central bank buying, rising record levels between 2022 and 2023. We don't have the final quarter figures of 2024 yet, but this is forecasted to be another bumper year of over 1,000 or 1,100 tons addition of physical gold into central banks. And yesterday only the news came up. I mean, there was Bank of China also restarted accumulating gold. So that's a good news for gold altogether. And most of the central banks are expected to follow the suit. Um, Another factor that helped gold rally throughout 2024 was Fed's easing. Now, if you look at this chart, this is a chart that depicts gold's performance on days after when the Fed starts to cut its rates for the first time. So zero denotes the first Fed cut date. So that for current cycle, it will be September onwards. So next 500 days performance. So if we compare that to the historic performance of 2001, 2007 and 19, there when we saw the Fed easing, gold has always rallied. And gold basically, whenever there is, why this happens is because when Fed starts easing, that means the interest rate, so the borrowing cost reduces, which is equivalent to the return that you earn on fixed income investments such as bonds. So gold is a non-yielding asset. So when your fixed income investments give you a higher return, you don't want to get into risky assets or even in a safe haven, because compared to bonds, that is literally a safe return. So when that is higher, generally the flows are towards them. So as soon as Fed starts easing rate, that means when these bonds and these public issued bonds or government bonds starts giving you lesser returns, they tend to invest back into risky assets, and that adds to the demand of gold as well, because you need to hedge and you need to invest in a safe haven along with them. Now, if I place this is an interesting graph that proves the history or the theory that I just explained. This is a graph that depicts the portions where Fed actually reduced rate, and it has always followed by a bullish run in gold. So, for example, the easing that happened in 2022, the rates that came down, gold was around at $260, and it did touched a new high of $730 when Fed started raising rates again. Similarly, in the next session of easing, every time if you see this historical graph, gold has always rallied once Fed starts easing, and that long bullish run continue even after when rates are back to zero or kept steady, unless and until Fed starts raising rate again. So current cycle will not be a different one. We can safely assume that current rally will be same. As long as Fed will keep easing rates, gold will continue to have a bullish momentum. What happened? Yet another factor was a softer dollar. Now this is very much same to Fed easing. So what happens is, initially in 2024, markets begin anticipating that Fed would ease starting by the end of the first quarter, which tends to weaken the US dollar. Now, gold is priced in US dollar worldwide. So when dollar gets softer, gold becomes more expensive for uh, dollar gets softer, gold becomes lucrative for other currencies, which basically raise the demand and causing the prices to rise. So traditionally, gold price is negatively correlated to both interest rates as well as the softer dollar, which means, however, there is a lot of talk going on that during the last quarter, both gold and dollar has rallied. Well, yes, that is true, and that is an anomaly. I mean, that can happen for a very short period of time. And there are other factors also, like it's not only driven by the dollar, right? It is priced in dollar, and yes, it impacts, but it is not the only factor. We do have to consider about the geopolitical tensions and other factors like central bank buying and everything that also supports gold. So that is just one factor of the dollar. So if we are currently witnessing some strength in dollar, that doesn't strip away gold's allure from the bullish run that it's experiencing right now. Now, this is how um, basically what happened recently, which was raising eyebrows against US dollar. So in September, if you see, Fed slashed a 50 basis point and gold did rally. So yes, the theory is correct. So whenever Fed will ease rates or dollar is softer, gold is tend to perform better. But now, the correction, that's what the question is. But you just have to see that the timing of that correction coincides with Trump's win, which means basically Trump is assumed to have policies which are inflationary in nature and bullish for US dollar, right? So, despite the fact that Fed slashed 25 basis points, the increase in US dollar or brought that downfall in gold because it outweighed that thing. Now, gold may consolidate unless and until we start to have a correction in US dollar. This anomaly can exist a little bit, but yes, overall, Federal Reserve in an upcoming FOMC also is anticipated to drop that rate by another 25 basis point as projected. So this will continue and um, will continue to support gold going forward. Another factor that helped gold was gold ETF flows. This is a surprising graph. Gold ETFs has been on constant outflows for last 3 years, but the last quarter of 2024 has seen a tremendous jump in ETFs. ETFs are basically a product which is largely backed by actual physical gold. So whenever there are inflows in investment funds in gold ETF, it actually give rise to the actual demand for physical gold, because all these ETF issuers have to have the equivalent amount of physical gold in worlds to issue them. So basically, all of this, and along with the rise of gold price, the AUM under ETF have soared by 33%. And according to World Gold Council, the current holdings is about 3244 tons. And this is just the beginning as per all the forecast. And we would we are expecting, the markets are expecting this to continue, and thus continue the allure of gold, basically the inflow and the continuous demand for gold is going to go ahead even in 2025. Now, these are the factors which propelled gold in 2024. So, um, like me, I'm sure all of you have been hearing endless discussions on gold projections and outrageous forecast of gold maybe reaching 4,000 plus levels. And thanks to the media attention that gold currently have, uh, analysis and forecasts have been raining for gold. So just like everybody else, we also have an in-house economic prospects for 2025, and we have forecast for gold. But before I skip to that good part, let's understand what we think is going to happen in 2024 and how it is going to impact the gold in 2025, right? So basically, we expect the global growth to stay with, it's basically an IMF number, less than 3%. And we completely agree with it because the slowdown that began in 2024 will likely extend at least to the first half of 2025. Markets are still adjusting to the era of an expensive capital. I mean, the markets or businesses or economies are so used to free capital that some of the correction or some of the downturn in economies because of higher rates looks justified. So, however, if we talk about inflation or if we talk about monetary easing, we feel that inflation is much under progress. The battle is not won yet; it is far from won yet. But yes, it's pretty much on track. A little derailing here and there can happen depending upon region to region, but majorly is there. But um, while the battle of inflation, while going up, every central bank followed the same suit of raising rates together. But the way back down the hill will be different from region to region. So while we really expect that there will be monetary easing, it's imminent, it has to come down, inflation has to come down, it will come down. But the timeline, the pace at which every region, developed or developing economies will do this monetary easing will differ from place to place. However, despite all that and higher rates, surprisingly, even Western economies, I'm not talking only about Asia, the Western economies also, labor markets are surprisingly resilient. Consumer spending is there, consumer confidence is there, risk appetite seems to return to equity markets, and definitely the risk that we had about credit default or economies faltering, that has all been said and done in past, and I don't think there are very minute chances of doing that. But geopolitics will continue, and there are concerns about China's recovery, and honestly, that plays a very big role in gold. So that is going to continue, and as an investor, we have to honestly watch over it. So if I have to, just drive a conclusion from what happened and what will be the inflation expectation going forward, because it is the fundamental driver of gold. Okay, so let's understand this chart of last 4 years. When pandemic hit, right, uh, Fed rates were close to near zero, and um, Fed actually eased near to zero. So that's why you see the first jump in gold. Gold rises because rates were lowered down by Federal Reserve. Now gold reached a new high here and actually made a double top around 2000 levels, which is a very bearish time, and it consolidated in between of that time frame because the Federal Reserve kept the rates steady. Going forward, uh, this was a bearish sign. The double top was a bearish sign. So that was the time when people expected gold to drop, and what's said and done. Uh, that was the time when inflation peaked out, and that drove Federal Reserve to embark on the world the historical, record pace of rate hikes and record levels of rate hikes to combat that inflation. So obviously, when rates were rising, the downfall in gold and the triple bottom that gold made all makes sense. Now, when cut to 2024, when finally the in between consolidation that you see in a slight uptick that you see in gold is supported purely by geopolitical crisis. And cut to 2024 September, where Fed finally started easing rates, it has led another jump in gold. So this is how history proves that how relevant inflation and Fed expectation is for gold, and it is going to be one of the significant drivers going forward also. Now it's important to note that yes, inflation is falling, but it is stalling. Okay, we were hoping of a very smooth way back to inflation to target levels, but that hasn't happened. In fact, in US, if you see, October and November kind of deflected, and there was a mild rise in month to month CPI numbers. However, last night the CPI, US CPI was still within the steady lines, and thus overall projections that yes, Fed is going to ease even in December another 24 points, and whatever the dot plot projection says about a 100 basis point cut in 2025 will hold. There is no change as yet, but this can change if inflation does show a rebound, especially because of Trump's policies, or because of any other reason, or geopolitics continues. This is going to change. What is one more thing expected out of 2025 is the very unique phenomena of negative equity risk premium. So basically, if you see, equity risk premium in US markets is vanishing. Equity risk premium is basically the extra return investors expects for taking on stock market risk as compared to any other safer assets, for example, gold. Now, surprising it is, but that equity risk premium is completely lost. That means people are so confident of investing in equities as they are in any other bond or gold, right? This does not bode well for gold. So what happens is, when you place equities in a risky category, you ask for a premium for it, and that means you get rewarded with that extra return to take that risk. Now, to mitigate that risk, generally a demand for gold happens. It is a part of your portfolio. But this practical scenario where you're just 10 basis points away from a negative equity risk premium basically points out that people are more comfortable in investing in safer assets like bonds, because they're giving greater returns with a very less risk. So they don't want to put money in equities. However, this can change. I hope this will change, but this is another projections that we have for 2025. What would also matter for gold in 2025 would be China. Whether we agree or not, for consecutively 10 years, China has been the world's largest gold consumer. And more surprisingly, for last 15 years, it is the world's largest gold producer. So its economic health, its standing, its demand matters a lot for gold. Now, basically, there is a market, which is underwhelmed because of the very disappointing stimulus Chinese economies have been, um, trying for last couple of months. And there was a news that People's Bank actually stopped buying gold in May 2024 after 18 months of continuous accumulation. However, the time period in between was picked up by India and Poland and Turkey. So actually, the central bank addition all over the globe kept on happening, but yes, China was out of the picture. And eventually, it's seen that because of the high prices, right, the basic consumption demand from China like basic consumption like jewelries and coins and basic industrial consumption of gold, right, is notably weakening. And that looks justified, to be very honest. At such a high price, general public or retail would actually hold their consumption for some time. But our projections, we still feel that we are hopeful about China, and China's authorities in its recent announcement clarified their intentions to uplift their economy in no matter what. They are not giving it up, right? In fact, their imports are improving. There is a sharp rebound in stock market, and we project that yes, China may surprise markets by some mega surplus in 2025, and that will automatically increase the consumption and investment demand for gold in 2025. So that can happen. Trump 2.0, that will be an interesting addition to gold. Okay, so Trump basically, well, Trump's policies have always been inflationary, but Trump 2.0 and the plans that we are getting from news generally talks about lots of tariffs on imports from China and EU. And certainly there are worsening bilateral trade relationships. There is news about lowering their domestic taxation. Basically, before Trump came into picture, there was a globalized system which relied on US dollar as the chief currency for transaction and trusted. There was a, there was a label of global police given to the United States. That's for a reason, because they spent a lot into um, providing that ecosystem of security. Cut to election where Trump comes in and he starts giving markets, surprise about tariffs and improving and repairing the huge US trade deficit. That's so that kind of took away the ease of globalization, global growth that the economy was relying on. And with I'm sure if Trump first term was just a warm-up act of deglobalization, Trump 2.0 will prove the main event, and all these consequences, all of that policies that will come will eventually you know um, lead to a bullish dollar. Now Trump will overhaul an entire nation of slapping massive tariffs on imports and slashing deficit, and with the help of Elon Musk, run a Department of Government Efficiency, which actually means a looser fiscal policy and a tighter monetary policy, because he might impact Fed's decision in lowering rates as well. So all of this eventually will lead to a bullish dollar, which in no way is good for gold. Another scenario that we project is going to happen in 2025 will be rise in geopolitical risk. The last 5 years have solidified the foundation for gold rise, because it's the continuous spikes that we saw in Russia, Middle East, COVID, and everything has always pumped gold, and it is considered as a safe haven. So no wonder that whenever there is a news or a headline about a war or conflict and escalation, it does shake investors confidence, and they run to gold, which is very normal, and this is going to continue. There we feel that there cannot be any common grounds of ceasefire between Russia and Ukraine. It completely looks impossible. In fact, the latest role of US in Middle East is also being challenged, and thanks to artificial intelligence that was used in the war, we can expect rapidly growing misinformation being circulated, and that could lead to ego based wars, right? And irrespective of what happened, we saw that there is a continuous build of relationship between Russia, China, India, Iran, and that is constantly challenging the influence US had on other countries, or its role as a global power. There is a power competition, and it is going to continue and it is going to worsen bilateral relationships. So no matter how much I personally want world peace, and I don't want this to be the reason why gold is going up, but it is going to continue. Another concern, or I would say the trend that we are foreseeing in gold is it's losing allure as a consumption investment, whereas it's gaining allure as a investment asset. Okay, so far, people are talking that because of high rates, retail consumption and actual physical gold consumption is going down, which I personally feel it's very justified. I mean, if gold can give rise about 30% in a year, right? The income or the disposable income that people used to have for globe does not go up 30%. So obviously they will cut down on a luxury. It is a part of luxury consumption, right? Which makes perfect sense at this point of time. However, the investment demand has gone up and is going to continue going up very well, as per our projections. It Despite of it reaching skyrocketing, and thanks to de-dollarization and thanks to inflation being stalling and thanks to geopolitics, I think central banks will continue to absorb whatever downfall we see in demand. And another good news, last quarter has already shown that yes, Chinese demand is picking up, and in fact, I think India also is a major consumer of physical gold, and they reduced import duties recently, so that has also, given basic retail participation a chance to get more gold. So basically, yes, the pattern of demand is changing, but overall, I think the total impact on gold's demand will not come as much as is feared of. Now, another topic of discussion is gold's current correction. There is a lot of talk going on that the current correction after touching the recent high on October 30th is end of bull run, or why is it happening, or basically people are attributing it to stronger dollar, things like that. But honestly, if you ask me as a trader or as an analyst, it is not at all loss of bullish momentum. In fact, if you look at the history, this is a chart of US elections and how gold performs after those elections. So this post election correction is not at all from any perspective wrong. It's very much what history indicates. It's very much, see, it's very common for people to hold gold as a safe haven asset until there is uncertainty. They hold it till the event, whether it's a speculative demand, whether it's a part of hedging portfolio, whether it's any kind of demand. They hold that position, long only positions, up till the key event, and then they release that position and take in profit. So some profit taking at the crux of uncertainty for the event for which you have been holding gold makes sense. And given a technical rise of 32% in one single go is unsustainable in every possible way. So if there is a consolidation, if there is entry and exit, if there is repositioning of portfolios, if there is change in hands in between the people, think about it, okay? And it is very normal and it's a good um, market dynamic. This is the perfect way of how asset should move. Consolidation at the missing rally should happen, and it's a strong indication that it will come back. Okay, so far we discussed what can happen in 2025. So on paper, everything looks good for gold so far, whatever we discussed. But that doesn't mean there are no concerns, okay? There are still concerns, and as an investor, if you're looking to invest in gold, you should be wary about those concerns. Political worries persist, but they can just phase out. Okay. There are constant attempts made, and if Trump wants to prove some point, he has to neutralize some of that geopolitical crisis. So that can happen also. Okay. Majorly, the global economy is on recovery path, and credit recovery is expected, especially because corporate earnings have been good. Now, good corporate earning means return of risk appetite into risky assets. Okay, while it has a multiple impact, it has impact where demand investment can flow out of gold, but it has an impact that yes, if you invest into risky portfolios from bonds and everything, you tend to diversify it using gold. So it will impact both ways. Bilateral trade and harmony is definitely questionable, and that can change the economic standing of many economies that are totally dependent on trade. Trump policies are yet another factor that can impact gold. We just discussed in detail. China is definitely the mover of commodities, and if they continue to have a dented economic outlook, that might impact their demand for gold. And the pace of interest rate cuts and inflation will matter a lot in 2025. It can change very quickly, and as an investor, you are supposed to stay wary of that. Now, let's talk about what will happen. So, uh, basically, when gold corrected recently, it was said that it's against the dollar. So basically, net value is same. So you have a dollar rise, but gold corrected. So the net real value of gold is still same. But to good news, gold has in 2024 rallied against all world currencies. No matter what product you pick up from whichever global economy, it's on a rise trend. So be rest assured, it's still on the bullish trend. So why I still feel that despite all these concerns, trading bullion is a good decision for 2025. In short, trading bullion comes because of its stability, because of the liquidity it offers, because of the its allure as a hedge against inflation. Gold has been used as a supplement to all fiat currencies. Whenever there is inflation and all these currencies erode, right? Gold tends to rise in price, and we are expecting this to continue. So the holding gold would be a good option when it comes to beat inflation in 2025. Gold is um, gold is the most liquid asset. It can be easily converted into cash. So even if for central banks it makes sense to de-invest from dollar and get into gold, why it's not equally good for somebody who's holding any sort of portfolio? This is what I want to say here. So, and we should not forget that yes, it's a wealth preservation benefits. It's for centuries it has been a good store of value, and it is continuing to be the one. And the very aspect of physical gold is that it's not a digital form of the asset. So yes, you can invest it digitally if you want to see it, but holding a physical gold comes with an idea of saving it for generations, passing it down the generations. So basically, it kind of arise you of a sentiment of never selling it unless and until you are broke. So that will continue boosting the appeal of gold going forward. And not to forget, just I told you that we are expecting equities to rebound in 2025. So that would mean you need to diversify portfolios, even if you have a portfolio in equities, and that can only be done by gold. Okay, so let's skip to the most interesting part of trading strategies. So since I have always been a trader, I when I look at gold, it always comes to my mind about the following strategies that you see on your screen right now. Depending upon what kind of investor you are, what kind of risk you want to take, what kind of funds you have, what kind of age you are in, you can use a lot of combination of these strategies, and I'll give you examples of some of the strategies that I have been using over the time when I trade gold. So one of the trading strategies is range trading. Okay, it's the safest I feel when it comes to speculative strategies. So what happens is whenever there is an asset that is which experience one side rallies, for example, like gold is currently experiencing a bull run, it is always followed by short periods of consolidation. For example, gold consolidated between 2000s and 2200 between December and February after it took a rise from the triple bottom and made a new high in uh, November. Then it consolidated between 2300 and 2500 between April to July. And it is a basic mechanic of markets. Whenever there is a rise, it will come back down and consolidate into the certain areas. So whenever that kind of consolidation happens, it's an excellent opportunity for scalping, for averaging, for re-entry points, for range bound trading. So as an investor, you should be looking at these consolidations for a safer short scalping kind of profit making. Trading the inverse products. So just like we have talked a lot about it, but gold and dollar are like inverse products because gold is dollar dominated. So whenever there is a movement in dollar index, uh, it has an adverse movement in the gold. So for example, if you have a Q about any of the inversely related products, for example, you project that dollar index is going to go up, right? Which is very common in current scenario to think because of the Trump policies, or if say Federal Reserves does not cut rates in the upcoming meeting next week, so it's assumed dollar will go up, so automatically gold will go down. Then you can use this strategy of forecasting and take a speculative position accordingly. Another beautiful the strategy that I use is using technical support and resistance or using Fibonacci's. Okay, now for as complex it may sound, let me explain it to you using this graph. So this is a graph, 20 years graph that I've taken. So gold was about $200 in 2003, and I extend that Fibonacci to the highest of 2011. So it is 1890. Okay, so this was a rally of about 1700 points. Now, if I extend that channel of 1700 points upward, right, then the gold actually retraced dot to 50% level in 2016. This is what the beauty of Fibonacci series is. It always happens whenever it did correct it to 50%. So anybody who follows this would can make a long-term projection that it has come down to 50%. So if there is a bull run, this channel will extend, and that channel from the bottom of 2016 of around 1100 points, if we add that 1700 point rally to it, it gave us a target of 2800, and beautifully the high that gold made was 2790. Okay, so I personally feel that this target of 2800 is still there. I think gold should definitely go and touch that, but because of this Trump and dollar and everything, it will consolidate. The 33% rise that we saw in 24 needs some consolidation. So this is how Fibonacci works. Another strategy that you can use to see the trend reversal is moving average crossovers. Okay. Um, Basically, this is not some, I couldn't find something in the current one, so I've taken an old chart of gold to depict this. So basically, on screen you see three different terms: short term, medium term, and long term. 50-day, 100-day, 200-day moving average. So when a short term moving average crossing up cross the long term moving average, it is a buy signal. That's why the signal here, when the 50-day moving average cross, that means that the current prices are trading. The short-term average is higher than the long-term average. That means it's a bullish indicator, market is going to go above. So that is where you go long. Whereas if the short-term crosses from above the the medium and the long term moving averages, this means prices are going lower. The short terms are lower than the long term average. So that is a sell signal, and that is how you determine if there is a short term change in the overall trend. Okay. The, extending this one, it's called a golden cross. Golden cross is, now we were just discussing about any short term and any medium or long term, right? But here we are talking about short term and the long term. So 50-day and 200. When a 50-day moving average cross the 200-day moving average from bottom, it's called a golden cross, and basically it signals a potential market shift on the upside. Another strategy that as a investor you could be using is arbitrage strategies. Now arbitrage refers to taking an offsetting position in two different contracts and possibly two different exchanges under the same underlying. So for example, we can talk about COMEX gold and say Thai gold online. The target here is to have one position long and one position short, so that the net position is zero and you are safe from any price movement exposure or risk, right? Now, this is just to eat the difference of pricing. Now, it's a very normal question to ask that why that kind of difference exists, okay? Now, yes, on a paper, on theoretical level, this kind of difference should not be there. After all, the underline is same, 99.5% purity, right? But because of different time zones, different trading hours, different physical market demands, different economies, different currency exchange rates, fluctuating policies of import export tariffs, these arbitrage opportunities does exist. So if as an investor you have access of two different exchanges in with the same underlying contract, you can very well get into arbitrage and make money out of it. The most basic is the speculative, where you go long with the upward bias. So for example, if there are higher highs and higher lows, you will go long. Whereas if they are lower highs and lower lows, you will go short. It's basically a trend, simple speculative trend analysis. You can look at any chart and place down these points and see with look for any entry and exit points or stop losses that you should be putting at. Okay, so let's talk about what I feel is going to happen in gold. This is gold's current chart. I just took it before the session. Basically, if you see this, the upward sloping line joining the lows of 2024 is the support level. And even if gold current consolidation or correction or whatever you call the pressures of dollar, it will still be supported above these lines. So every time there is a dip, it's a buying opportunity or it's an entry opportunity for anybody who wants to go long. So and there was this upward sloping line that was just very recently in November and December. This was a beautiful triangle in making. Generally, when there is a consolidation between this triangle in making, right, there is usually an upward strike or a downward strike and a major one, right? And just yesterday, gold had major movement and it crossed that triangle. So if it does continue its bullish, it is out of the triangle, so obviously it can continue its bullish trend. It will definitely touch 2800 and look forward to maybe 3000 in the next quarter. And if it does come down, it will still be an entry point around 2600, 2650 going forward. Now, taking this chart further, I have placed a regression from its recent triple bottom it made around 1800s to the highest point. Okay, so that gives us a level of Fibonacci level of 23.6% and 38.2%. So gold can come down to 2500 if there is excessive weakness or Fed doesn't, but all these points will be 2500 or 2630. First 2630 is the support, then there is 2506. But all these points are entry level for any investors who's going to look long. But overall, the I'm still very bullish for gold. It will go beyond 3,000. Don't have projections of 4,000 or something that looks very unlikely. I still hope it will continue beyond 2,800 and do touch 3,000, but that may involve a lot of sideways movement and a lot of consolidation and at least first quarter of 2025. So, to end the session, I would like you to tell that irrespective of your current portfolio, you can gain access to gold in many ways. And these are the products that we, as in Phillip, offer. We offer gold futures, we offer spot gold, we offer all the possible good ETFs listed on both Singapore Exchange and US. We offer Apex perpetual gold contract. We also offer a physical form of gold investment. For that, you have to reach out Philip Nova exclusively, and we can send out details to you. And we have a dedicated sales team who are ready to explain the product offerings we have, the charges we have, and the way you can open an account and trade with us. And for now, that will be all. And if you have any questions, this is the time, and I will be very happy to take them for you.
Hey Priyanka, thanks for a very comprehensive gold outlook for the next year. And then I believe our attendees are very passionate, so they have raised a lot of questions. So due to the time of limits, we will just pick maybe 6 to 7 questions.
Mhm.
Priyanka, so first question is more about the tariffs, which how would tariffs to be imposed on BRICS countries should they move away from USD affect the inflationary scenario? What impact does it have on gold price in the next year?
Uh, yes, so I think I did explain this during the session also. It's very likely that US will impose, and Trump, I think, very voiced out very seriously about, about the BRICS countries union, right? And yes, I think all of these countries would be shunning US dollars. They would be getting into gold investments. And yes, it will lead to inflation and jump in US dollar. So yes, all of this will work magic for gold. So in case you still haven't entered, please look for an entry point and get into gold.
All right, thank you, Priyanka. I think the next question is more about the possibility of gold being revalued in the near future. So just like what it happened in the past, like Roosevelt revalued gold from USD 20 like 0.67 per troy ounce
Mhm.
to USD 35 per troy ounce.
Well, that's a tricky question to answer. Well, I cannot be saying that this is not possible. Everything is possible, right? But I don't see this happening, very honest. See, those were the times, those were a different time. US was a different kind of a power. Today, I mean, just a very simple nation like India stood against US sanctions on Russia and kept buying oil because it benefited their economy, right? So, having such a hold and doing this without the support of all other economies, I don't think it's that easy at this particular junction where we stand. But uh, I mean, the likely chances are very less. But yes, gold does deserve this kind of rate hike, and that can come into financial markets. We have very much ease accessibility of deciding the prices on exchanges. So I think fair market should prevail, and that should give gold its correct value instead of being repriced.
All right, thank you, Priyanka. The next question is also about tariffs. Like, do you expect Trump's tariffs weaken or strengthen US dollar? And how will it affect gold prices?
Trump's tariffs usually in all scenarios will lead to a bullish dollar, right? I don't think he has any double guessing. He's very prominently saying about the tariffs, which is inflationary for their domestic. This he doesn't care. He wants to repair the fiscal deficit, and I don't think the battle with inflation is that easily won. So. It's a a perfect recipe for bullish dollar basically. So loosen physical tariffs and then higher rates is perfect recipe for US dollar bullish and other currencies weakening against it. So yeah, brace for it. Yeah.
All right, thank you, Priyanka. We will answer three more questions, I would say. So,
Mhm.
the other question is, what is your trading strategy when you are doing gold trade? This means like, for example, some attendees also ask, is it a good idea to buy gold ETFs? Is it a good diversification to invest in gold ETFs?
Well, yes. So, for example, I'm a trader, okay? There is a difference between investor and a trader. I've always been a trader. I'm not only long only. So, whenever there is a basic assumption when we talk about gold trading that people are only long only on gold, but that's not the scenario today, okay? And yes, ETF is a good option, especially in short term. See, when you talk about ETFs, the only problem with ETFs is that it comes with a cost, and people generally feel that if you hold ETFs for longer, it takes away the portion of profits that you are earning in gold. But see, it's giving you a flexibility to not own physically and protect you from other things like market premiums, or actually when you go and if you have gone to actually buying gold for jewelry, coins is a separate issue, but if you go and buy a gold bar, a kg, right, it comes with a premium, right? It comes with a cost of storage. So yes, if you don't want to, and I personally, because I'm a trader, I personally feel I want to see my gold holdings as a part of my portfolio, and that is only possible when I see it in paper form, right? Electronic form. Whatever gold that was passed on generational to me, or bought in physical, I don't count them as a part of a portfolio. So if you are an investor, yes, long only strategies. But if you are a trader, please, ETFs is a good options. Mini futures is a good options. These days you have like digital gold options. So do go and try them, and then you can do two-way trading in digital forms as well. So if you are feeling that you want to short it, you can short it, right? So it gives you advantage of doing that. So it depends on, I'm a trader, so I like to do it on tradable um, digital platforms. But if you are an investor, long only is also not a problem.
Thanks, Priyanka. I think just now you also mentioned about paper gold. So there is also a relevant question about this. So what is the ratio of physical gold to paper gold?
Sorry, I didn't understand this question. Ratio, so if you want to, if the question means that all the paper gold is generally 100%, if not 100%, 99% backed by physical gold. So all the issuing authorities, as per the regulations, have to have physical gold holding to issue paper gold. That is same laws like ETFs, right? So it is 99 to 100% covered, if that what the question is. Or
Okay.
if the question is the ratio of physical gold to paper gold in your portfolio, that is difficult to comment. Depends on your risk appetite and choice of trading. Yeah.
All right, thank you, Priyanka. I think we will have our one last question to be answered
Mhm.
today. So, the attendee is asking, U.S. debt holders like China and Japan are selling treasuries to support their currencies. So, if the Fed will resume the QE to buy U.S. debt, will it be positive for gold prices?
Um, yes, yes. In a nutshell, yes. So, um, y- the more see when you all of these activities that they try to support their economies, right? They actually influx a lot of disposable income, and that will turn into gold demand, and that's how it's gonna benefit it. Yes.
All right, thank you, Priyanka, for today's sharing, and then also thank you for all attendees to tune in today. Because I know like it's a little bit late, but just bear with me a little bit, because there are some promotions and also the ways of goals that I would like to introduce to you guys. So as you can see that there are four ways to trade gold with Phillip Nova, including spot gold, gold futures, gold direct investment, and gold ETFs. You can scan the QR code on the right hand side to learn more about our product offerings. And then you can open accounts whenever you are ready, just trade and the different products to back up your portfolio of the gold investments. And the next is we are also having some promotion about the Apex Gold Perpetual Futures. You can access a more capital efficient way to trade gold with Apex Gold Perpetual Futures. The contract comes with no expiry, low margin, and with more than 20 times leverage. You can scan the QR code on the right hand side for the full details. And then also on the left hand side, there are more promotions coming along the way. Like for example, the Nikkei promotions that we are having for the futures, and then etc. etc. It covers of the different products that we are offering from Villanova side. And on the right hand side, if you are more interested to know more about the educational materials that we are providing, here are the upcoming webinars and seminars. And then the next Thursday, we are going to have a stocks guide in the next year. So you can scan the QR code on the right hand side and then to register for the next week's webinar as well. So thank you everyone for attending this session, and then thank you Priyanka for the very comprehensive gold outlook for the next year. We see you
Thank you everyone
next
for
time.
tuning in. Yes.
Thank you. Good night. Bye bye.